Really good, was really good. Back at it again. Let's get started by the title. This is going to be a liquidity strategy video that gave me a 90% win rate last month. I just started my new month like half of last week. The other half of last week is when I started my new month. If you follow me on Instagram, you would have saw that. That'll all be in my bio, especially within the mentorship. Got 2 free sessions now that are 1.5 hours, 2 free sessions. So there's no risk. And just to make sure that I'm the right person for you. And the Discord is free as well. Give out all trade signals. We're like 13 or 15 for 15 in a row. Only took 1 loss, and that was the first ever call out, which is like weeks ago. So been doing great. Besides that, this video is just going to be going over this main liquidity strategy that I've been utilizing for like the past month. Just more on understanding what the market actually wants and what it seeks out, and just more in depth, so then you can actually take more confluential trades and just have more confidence within your own self. What you'll be learning in this video are the overall basis of daily 4-hour lows and highs, and primary liquidity, what I call primary liquidity. So what the market actually wants, not standard liquidity. So just your regular lows and a buy side marker, or the highs and a sell side market, like standard primary liquidity. The primary liquidity that the market actually wants, not standard regular liquidity. So the highs and lows, et cetera, et cetera. And just how to find those, how to chart those out, and ultimately understanding which one price is actually going to go to. All right. So this is NAS 100. As we can see, we're on the daily time frame within there in terms of how to before all that, what is primary liquidity? What is what I call primary liquidity? Again, like I said, primary liquidity is what the market actually wants, which in this case are going to be daily and 4-hour highs and lows. Now, you might be like, oh, well, woo. What is that? That doesn't have to do with anything. Well, or like, oh, well, it's the same thing. It's still just liquidity. Why am I watching this? The difference between a daily high, daily low, 4-hour high, 4-hour low, and just regular liquidity, so the highs and lows, are there's going to be more stop losses and more money. The market wants liquidity, and it wants balance, and it wants the most liquidity and the most money so they can get more money, and so they can feel a bigger reversal or continuation within the market. And guess where they're going to find those? In the daily highs, 4-hour highs, lows, etc. Because within that, again, there's going to be more liquidity, more stop losses, liquidity pools, which I'll go in detail in just a second. And again, that's going to have more money than just a regular high and a regular low. There's going to be more money in those daily highs, 4-hour highs and lows than there's going to be in just regular highs and lows, And ultimately, the market wants liquidity. It wants money so it can feel bigger moves and get more money, So back to this daily time frame, we're going to chart out the high and the low of the daily candle. Today's Saturday. This is all going to get recorded, posted, et cetera, the same day. And yeah, so we're going to chart out the daily high and the daily low. But not only that, we're going to chart out the relative highs and lows within that area. So that's going to be right here, because price never swept here. If we can line that up more straight, there we go. And we're also going to mark the one up here. I'm not worried about these up here because those are long gone, far away. Price can get to them, but primarily we want to focus on the more relative highs in this case. Now we're going to jump down to the 4-hour time frame. In some cases, the daily highs and the 4-hour highs and the lows can match. So like right here, this low right here on the 4-hour is the same as the daily, and same with this high right here. So we'll focus on the other ones and we'll chart those out. Just in reference with the video, my blue lines are going to be my 4-hour highs and lows, and my black lines are going to be my daily highs and lows. All right. And just more terms of what I call them is, so here would be a daily high, or the daily time frame within that would be a daily high. Anything else above that would be what I consider a ODH or an ODL. So an old daily high and an old daily low. We can drop back down to that daily time frame. So these are going to be the daily highs and daily lows for Friday. Anything else other than that is going to be an ODL or an ODH. So old daily high, old daily low. That's what I call it. It might be standard reference or title, just the ODL, ODH, but that's what I call it. Back to that 4-hour. Again, we're going to mark out the highs and we're going to mark out the lows. Primarily what we got here to mark out is just going to be those two candles. Get that with a straight line. Beautiful. All right, and then from there, we're going to drop down to that 5-minute time frame. This is going to be charting up everything, but in this video, we're not focused on charting up everything right now. Now, make sure everything is aligned. Now, from there, you might be like, oh, well, we have those set up. If they're all considered primary liquidity, what the market wants, which one is it actually going to go to? And what determines that is overall the manipulation in the market. The market wants money. It wants liquidity. The most liquidity is going to be at those daily 4-hour highs and lows. And within that, because we know the market is going to manipulate to those bigger liquidity areas, that's what we pay attention to, is the manipulation. Throughout the video, especially when I go over the trades that I took this week that play into what I've been talking about and what I'm talking about in this video, like significantly. And I'll even show the video in like a corner. You can see what I mean by watch the manipulation. But what I mean is, so again, we already know the market's going to manipulate towards liquidity so then they can sweep more liquidity, more continuations, more reversals, et cetera, et cetera. And that's what you need to watch for. So down here, we have we got a daily low, an old daily low, and a 4-hour low. And you might be like, oh, well, which one is price going to go to? And from there, like I said, you watch the manipulation. So in this case, let's say tomorrow when the market's open, let's say it's not consolidating. It's moving like a regular day. All right. And let's say there's no news, but you see tons of volume and volatility within a candle. That is manipulation as we speak. So this big bullish candle, let's say there's no news and this candle just starts going back and forth, back and forth, back and forth, but ultimately pushing to the upside. That lets me know there's manipulation in the market. All right. And let's say there was a daily high up here. Obviously it didn't come up here, but let's say there was a daily high up here. All right. Seeing that this is clearly manipulation because it just keeps going back and forth, but primarily it's pushing more up, up, and up. That's what lets me know that I need to look to make a buy side setup real quick, just like a in the moment bias reversal. And I need to get into a trade that primarily aims for the daily high and vice versa. So in this case, again, if the market opens, whatever, and you would think, oh, well, because this is the closest primary liquidity, market's going to sink all the way down here, sweep that, reverse, or have a big continuation. What you need to pay attention to is the manipulation. So let's say the market starts manipulating, just showing tons of volatility and volume within the candles, and there's no news, but it's pushing up and up and up. We'll delete this real quick, but it keeps on manipulating to the buy side instead of manipulating down. That means two things. One, this primary liquidity right here is not the first primary liquidity on the hit list for the market. That's what we'll call it. We'll call it the hit list. All right. These were not the first areas on the hit list that the market wanted. And two, because this plays in just to liquidity in general, there were not enough people in the market to add on to the manipulation to a set direction. Therefore, they manipulated to the market in the opposite direction so then they could push it back down to that said direction. So let's say the market starts manipulating, showing tons of volatility and volume within the candle. There's no news, therefore we know it's manipulation, and it just keeps on buying. Let's say you get a buy side set up and boom. All right, you wait for it to tap into it. We'll just say there's a demand zone right here. All right. From there, ultimately, you already know, because there's been manipulation and clearly it wants to go to the buy side, we are going to seek out the daily high or the 4-hour high, and that's what we're going to go for, because the market should have been sinking down here. It should have swept liquidity down here, but it's manipulating upwards. Guess what's above? Daily highs, 4-hour highs, primary liquidity, and standard liquidity, meaning the market wants the liquidity above, all the money above, so then they can sink the price all the way down and then sweep the primary liquidity that was second on the hit list down below. That's all. Again, just more reiteration on a couple of things I've already said. Just pay attention to the manipulation. I'm about to go over the trades that I took yesterday and Thursday, just mainly those two because I don't want to go all the way back. And I'll also show the video clip in there so you can see what I mean by watch the volatility, watch the volume. That's clearly manipulation because there was no news, and that will play into your confluences of where price is actually going to go. Because ultimately, the market is going to do whatever it wants to do. It is going to manipulate and go wherever it wants to go. Only thing that we can do is react to it prominently and move diligently and correctly. And if you can do so, you can ride the manipulation instead of being caught in the manipulation and capitalize off of really big trades, or maybe it's a small trade, but you still got big profits from it, and being more profitable, more consistent. So then you can ultimately become more successful within the markets. All right, so right here, we had a 4-hour high here. This is yesterday, Friday. We had a 4-hour high here. And guess what? We had tons of buy side pressure. It looks like, because it's right there, same with that daily high, that's where the market's going to go. Just like right here, it looks like, oh, the market should be sinking down below to those lows right there, the primary liquidity. And then guess what price does? It immediately manipulates and goes all the way down. Now, by saying liquidity, standard liquidity isn't the main liquidity the market wants, doesn't mean it's not going to seek it out. It'll still seek it out, especially in this scenario, ultimately to push up to sweep out primary liquidity. But, you know, besides that, again, just because primary liquidity is right there doesn't mean that's the first one on the hit list. And in this case, I'll actually put this trade in the corner right now, the actual video. But in this case, obviously it should have been buying. And then this big bearish candle was clearly manipulation. I saw it clear as day. I had buy side bias, but I saw the manipulation that it had to the downside with that big bearish candle, knowing that there was no news. So that gave me more confidence that price is going to sink down. And guess what is down there? Liquidity. It might not be primary, but it's standard liquidity. So the market could push up and seek primary liquidity. And from there, price retested and rejected because it also gave us a setup within that manipulation. And we caught this thing, I think it may have been around here-ish. It'll show it in the video. And we held it to the order block slash demand zone right here because we had gap, impulsiveness, and break of structure right there. And that was a really nice trade. Really great trade. All right. Going into Thursday's trade, if I can find that really quick. All right. So right here, this is Thursday's trade. Again, just like the last one, I'll put the video clip in the top left or right corner or whatever, so it doesn't take out the full screen. But we had a 4-hour high here. And guess what price did? It just matched it. Didn't sweep it. And then ultimately, manipulation all the way down. Seeing that manipulation all the way down, and guess what we had down there? A daily low. Right here. There we go. As you can see here, July 17th, July 18th. Therefore, that's a daily low. All right. And we had a daily low down there. So ultimately, I had buy side bias towards the fact that, okay, we were going to wait for price to retest probably into this little demand zone right here. And in doing so, it's going to push up and sweep to that 4-hour high. It didn't. And then price ended up coming back down and tapped into it. Reversal candle. I'm thinking, okay, now it's going to push it to that 4-hour high. And then guess what? More manipulation to the sell side. This is what I mean by pay attention to the candle's volatility and volume. Look at the manipulation. If there is no news that is hitting that will cause that volume volatility, which the only reason that's going to happen is if it's high impact, bare minimum, medium impact news. That means if there's nothing there, that is clear as day manipulation. There was a 4-hour high right up here. The market didn't sweep it. And guess what's below? A daily low. Clearly, that daily low was the first primary liquidity on the hit list that the market wanted. Not these little minor areas, that daily low. And we could tell by all the sell side manipulation, even though price should have clearly bought upwards, swept that 4-hour high and any daily highs above there, but it didn't. It got manipulated. We noticed the manipulation because of the volatility and volume within those candles. And from there, we waited for a setup, and that's when we entered into a trade. Again, that video probably was already shown. If not, I'll show it now. And this was the setup it gave us. It gave us a big old supply zone right there, clear as day, kind of full body, bearish candle, sell side, boom. And took this to, we were in around here, or at least I was in around there, and held that all the way down to there. This gave me 138.8 or 3% profit gain right here. And it gave one of my students a 50% profit gain right here. this trade right here. And this is what I mean by pay attention. Pay attention. You need to be diligent within the market. If you cannot be diligent within the market, you are going to catch yourself getting screwed over all the time. The market does not care about you. It doesn't care about your setup. It doesn't care about your favorite trader strategy. It does not care. The market's going to do whatever it wants. What we have to do is react prominently and be diligent. In this case, me and my students within my Discord, again, free, we're being patient and we were being diligent. We were expecting a buy side move towards that 4-hour high, but guess what? Price never swept it and never went up there. And even though it looked like it should have when price tapped into this demand zone right down here, it didn't. It gave us another big bearish candle, letting us know that this is going to keep selling, letting us know that there's tons of sell side manipulation, which means the market is most likely going to go to the daily low, sweeping other standard liquidity in the process, because that is the first primary liquidity on the hit list. And once it taps into that demand zone, that's when we went to short, and boom, just like that. This is what I mean. Understanding what the market truly wants. We already know the market wants liquidity and balance, but what we need to continue to emphasize and drill in our head is not only does the market want liquidity and balance, it wants primary liquidity. And primary liquidity are going to be in the 4-hour and the daily highs and lows. And that's what we need to focus on. Oh, geez, my camera done froze. That's what we need to focus on, and that's what we need to pay attention to, because we already know what the market wants. Now we just need to focus on what the market truly wants within that aspect. We already know the market wants liquidity, but now we need to focus on what part of and what section of liquidity that the market actually wants. And that is paying attention to the manipulation and volatility within the candles. We had clear as day manipulation right here. I didn't even have to show the video of the trade to give you a clear view of what I mean by the manipulation. You could tell there was tons of manipulation. There was no news. You can check yourself. Go to July 18th, 8:30ish. There was no news, and no high impact or medium impact news to cause this much manipulation and volatility within the market. That means that's clearly manipulation. And down below, we have a daily low. That's primary liquidity. That was the primary liquidity on the first hit list. Then we wait for a setup that is formed within that manipulation that adds into our confluences. And then once we get the right confirmation by being diligent and patient, that's when we take that trade confidently, knowing that clearly market wants the daily low in this case, or the 4-hour high or daily high in another case. Because clearly market has shown that it doesn't want that primary liquidity. It wants primary liquidity down there. All right. So a little recap. Again, we're going to chart daily highs and 4-hour highs on the daily high and the 4-hour time frame. Not only are we going to focus on the previous days and the current days 4-hour and daily highs and lows, we're also going to focus on the relative daily highs and daily lows and 4-hour highs and 4-hour lows, because those are also going to play into what the market actually wants, because those also aren't going to be that far off from each other neither, So, and then obviously from there, amongst your chart setup with whatever you use, obviously I use supply and demand, my students use supply and demand. Then we wait to see how price wants to react. We wait to see if there's going to be any sort of manipulation. Is there going to be anything that's going to lead me to believe that it's going to go to primary liquidity in this direction instead of down here, or down here instead of up there? We're going to react prominently and be patient. We're going to be aware of news. Use news. I use daily FX and I go to the economic calendar. That's where I track all my news stuff. If there is no news at that time, no high impact, bare minimum, medium impact, then that means any volatility and volume within the market is clearly manipulation. And wherever that is, and wherever price is getting manipulated to, that is where the market is going to go. And then from there, you pay attention to the fact that, oh, we have primary liquidity in this direction that the market is clearly manipulating towards. That means the market wants that. And that's when we enter into our trade, and that's when we take that position, and that's when we capitalize and ride the manipulation. All right. Simple as that. Again, all my stuff is going to be in my bio, my link tree, socials, etc., etc. You can always DM me. I always want to talk to anybody, especially within the comments. I just bumped up my free trials or my free sessions from 1 free hour-and-a-half session to 2 free 1 hour-and-a-half sessions, just so you can build even more trust with me and see if I'm the right person for you, and ultimately to see if you just like me, point blank period. You don't need to be paying me if you don't know me and don't trust me. Simple as that. I'm a man of God. I'm not going to lie to nobody. I'm not going to do none of that, So use those 2 free hour-and-a-half sessions. You won't regret it. And most you might lose is an hour and a half. There is no risk. I completely made my mentorship and my Discord risk free. I don't charge anything within my Discord because let's say I do take a loss. You paid me just to take a loss. You know, that's just messed up. That's why that's free. And you take those trades at your own risk. That's why they're free. That's why I do my Discord free. That's why I have my free sessions. I even have a live. That's another thing I add into. I have free live trading sessions. So if you want to trade with me live, you can also book that for as well. That's also going to be free. One of my students also capitalized off of one of those as well. And yeah. But I hope you learned you something. If you need to run it back, slow it down, do so. If you need to DM me, whatever, more explanation. Again, you can use that free hour-and-a-half session. I can go more over this. That's all going to be in my link tree in my bio and probably in the description as well. But yeah, you can like, subscribe, go to the gram, whatever you want to do. Just trying to help some people out. I'll see y'all.